Welcome back, guys, to the Investing for Beginners community. I'm your host, Johnny, and in today's video, we are going to use the Robinhood app and the Seeking Alpha to look over the business's fundamentals, their history, some information, their PE ratio, dividends, all that stuff. So if you like that, definitely stick around to the end to look at some of the other stuff you can't see unless you are a premium member like I am. Now, if you do want to sign up and become a premium member with the Seeking Alpha, you can sign up with the link below and you'll get a huge discount for using my link. Now, Vanguard S&P 500 ETF is on fire and people talk about it. You've probably heard of it. They are ETF, but they're up over 85% in 5 years, which is just fantastic, guys. Their max life is up 327%. You could have bought this company share for $100 back when it was first IPO'd in 2010. Now, about this company, they're an S&P 500 TR. They're US track based. They're a large blend. They have over 500 holdings. And right here it shows the sectors as of December 31st. So this is about 2 weeks behind their original update here, but basically the same. So technology, they have 30% technology, 15 in financial, 12 in healthcare, 11 in consumer, 8 in communication services, 8 in industrial, 6 in consumer defensive, about 4 in energy, 2.5 in real estate, 2.25 in utility, and 2.25 in basic material. Now, what does that say? Well, it says that the majority of their holdings, 30% or a third, is in technology. Now, the top 10 holdings, or 30% of their total assets, is in Apple, Microsoft, Amazon, Nvidia, Alphabet Class A, Meta, Alphabet Class C, Tesla, Berkshire Hathaway, and JP Morgan Chase. Now, there's nothing wrong with this combination of stocks. I have many of these in my portfolio as well. This is just a third, basically, of their total holdings. So if you want to just simply mimic this Vanguard S&P 500, then you can simply put some money into these holdings. Now, the crazy thing about that is, yeah, you could go and buy these 10 stocks, right? And you could allocate them accordingly. But what you don't have is like hundreds and maybe even like thousands at this point of dedicated members of people in this ETF that actually monitor it and do it daily. They don't just put money in and watch it. If they see plays where they can make money from a down play, they will buy shares and then get more on a discount. If they feel like they need to adjust their assets and put 2% more into Berkshire Hathaway this year and take 2% out of Apple, they will do resource allocation automatically for you. Now, with that said, you won't necessarily have to pay an expense ratio fee, but their expense ratio is extremely low at about 3%. Their 30-day dividend yield at 1.43%. So the dividend yield will actually take care of the expense ratio, which is fantastic, right? The company can pay for its own expenses. Now, their PE, their earnings per share is 22. That's fantastic. We don't like to invest in companies with a negative PE ratio. And they have almost a billion or almost a trillion people who are alumni in this, so that's pretty amazing. 5 million average volume with 3.8 million volume today. Now, we are going to look at some of the stats of what the bulls say and what the bears say. Definitely smash a like button. And right here it says their month end, 1 year, 3 year, 5 year. Look at this. This is awesome. Their 10 years, 12%. Their 5 years, 15%. How would you like to make 15% on your money? Well, you definitely could with this company. They're up 20% for the year. So just last year, you could have bought around $350. And as you can see with Robinhood, guys, for new investors out there who are just starting out and are watching my channel, look at my market value. It's only $15. what I'm doing is putting $5 every so often into this account when I feel like there's some potentials to buy. So I just bought $5 around here, like right around here, or right here, about $5, and I bought $5 around here. So that's why my total return says plus 15 cents. My average is 4.33. So I bought it down here, right, 4.33. So now it's going up and we're making money because my average is way down here. And the more money you put into it, the more money you're going to get out of it. And my portfolio diversity is very low too. It's only 3%. You know, you don't want 50% allocated into your single account, because as soon as it goes down, then your entire account goes down. Anyways, from the basics here. Now, the Seeking Alpha is a great platform to use. I use it a lot. I use it all the time. I was even using it before they reached out to me to become a partner with them. Now, I am a partner with the Seeking Alpha, and if you do sign up with the link in the description or the show notes below, you will get a huge discount on a premium subscription of this platform. Now, thankfully, you're watching this channel and you can see inside without actually having to buy. Now, what you get is a lot of great, fantastic tools, and I actually have a video talking all about it. That'll link up above if you'd like to know more in depth about how Seeking Alpha works and some of their cool features. But don't want to get into that today. We're talking about Vanguard S&P 500 ETF and how they are up 80% in 5 years, 20% in a year. Look at that, 21%, just fantastic. Now, they do pay a, I believe, quarterly dividend, and their dividend rate is $6.36 per year. And I could actually look up their dividends in just a minute. Now, their ETF grade and their rating summary is great to have here. Now, they have a hold right now on the Seeking Alpha, and the quant is saying to buy. Now, their ETF grade right here for momentum is A, expenses A+, dividends A-, risk A+, and liquidity A+. So they are just a 100% A+ strong buy company right now as we speak with this video. Now, asset class, it's a US equity. It's a large blend, ranked overall 122 out of 2,400, and ranked in asset class 45 of 580. Pretty cool. Now, there are some other comparison type ones, VTI, of course, Triple Q, SCHD, and VYM. Now, I do have many videos on these companies, so if you want to check those out, look at some of my other videos. Now, there is analyst news available on either side. I could even submit articles if I'd like. Seeking Alpha versus Wall Street. Now, this is what we're going to be talking about. Seeking Alpha analyst hold is saying a hold, buy is saying 7, hold 2, and sell 3. Now, we are going to get into what the bulls are saying, what the bears are saying. Right here, one of the bulls is saying that the S&P 500 has been a great investment over the long period. It's very difficult for active managers to outperform this index. It's very true. As I said, active managers, right? There are people actively managing this account to keep it growing 20% a year. Now, based on our analysis of current macroeconomic conditions and EPS estimates for the S&P 500, we expect investors to realize a total return of 10% over the next 12 months, not including dividends. So you get 10% appreciation with, you know, roughly, what was their dividend yield? 1.46%, so roughly 2%. So you get about, you know, you get a little bit there, not bad. Now, what are the bears saying? The bears are saying, although we see a 2024 unfolding in a V shape, we believe that the dive is going to be more meaningful than the recovery, thus likely seeking index ending 2024. Now, at 20 times forward PE, the S&P 500 is too richly priced going into an economic slowdown. So they're saying it is slightly overbought, which it could be slightly overbought, but in my position that I want to play it, I'm going to be averaging down, even if it is $5 a day, with this company for the next year. So that way, if it does go down to the $400 mark, $380 mark, $360 mark, I will already have a nice substantial play for when it goes back up to this $500 mark. Now, if you want to know more about some of the investing $5 a day or the investing dollar challenge on Robinhood, I have some videos on that that could also help you get started as well. Really fun to do. I have a $5 challenge right now going into the SCHD account, as well as $5 every single day going into the Berkshire Hathaway B stock. So definitely subscribe. We have an update video coming out on January 28th. Episode 417 is going to be that episode. I didn't even mention the episode for today. We are in episode 409, guys. Episode 409. I can't believe that. That's a huge milestone. Just like Vanguard right now, they are up almost 1% just for the day. That is fantastic. Today's return, I'm up 14 cents on $15, almost 1%. Pretty cool. Hope you guys enjoyed this video. It was short and sweet. I do have some more stuff coming out. If you want to know more about the top 10 holdings, like here they are again, dividends here, dividend growth history over time. Now, dividend growth history has been growing over time, actually. They're now at $6.36 in annual dividends. So yeah, if you want to learn more about how you can start your investing journey, sign up with the link below, join our weekly newsletter, and you will get a free 10-step guide ebook, Financial Freedom Can Be Easy, that'll help you start your investing journey to financial freedom. You also get a free plug-and-play budget template that you can use to help with your step number 3, which is living below your means. Help you make some good decisions in your financial journey, save more money so you can invest more money and break free from that 9-to-5 job. Now, if you want any of that, like I said, sign up with the link below or in the show notes. Thanks for watching. See you in the next one.